Alright, so I've extracted the account activity for the month of July from Questrade. So in this video, I'm going to talk about my closed profits for the month of July. Now, if you've been watching my videos on my weekly profits for the last 3 weeks, most of these trades you'll recognize, but probably the first 2 weeks is not included in the previous videos. So in this video, the amounts will be after commission. So this is the final profit after commissions. And if we go look at the total right away, I have no problem showing that. So it's a total of 1,074 USD for the month of July. And if we look at some of the trades, I've sorted the activity by symbol and then by expiry. So first you've got Apple. This was a put spread from last week. So at the end of July, you can see here July 30th, closed July 31st. So net of commissions made a $48 profit. Capital required for this trade is about $400. Amazon, same thing, same time frame, July 30th, closed July 31st. It was an earnings trade, so profit after commissions was almost $56. Capital acquired was also about $400. Electronic Arts was also an earnings trade, July 30th to July 31st. Net of commissions was a $32 profit. And then you've got Facebook, same thing, earnings July 30th to July 31st. Net of commission was $62. And then you've got FedEx. It was open June 30th, closed July 1st, so considered a July profit. It was a naked put. It was an earnings trade, 131 put. FedEx after earnings flew. This one was kind of dangerous because obviously I guessed the direction and I was lucky. I was right, but it could have gone the other way and I would have been in trouble. But I had a strong assumption that FedEx would go up after earnings. So this was a $111 profit. It was a naked put, so it wasn't a put spread. That's why profit is much higher. And then Netflix, if you remember this one, this was an earnings trade on Netflix. I went a little crazy on that. I did 10 contract. I sold naked calls at a 700 strike when Netflix was trading at around 525. So as long as Netflix does not go above 700 after earnings is announced, then I'd win on this trade. And in fact, Netflix went down after earnings. So I collected 48 cents times 10 contracts. So that's why it was $480. So after commission, it's $467 profit. And then I've got some Spotify trades. So I've got some naked calls and some naked puts. So on the naked calls, $53 profit. On the naked puts, $88 net profit. And then I decided to do a put spread one week and I lost on that one. It was a put spread that got tested completely. It had a 265 strike, and then when it got tested, I sold a call spread at the same strike. So I turned the trade into an iron butterfly, and then I ended up closing the trade for about $3, and I lost at the end with commissions and $199, so almost $200 loss on that one. And then I had some more naked calls on Spotify. That one had a $250 profit net after commissions. And then I had an earnings trade on Spotify. So that was from yesterday's video. Sold naked calls at $350. This one ended up being a loser because I closed it for exactly what I collected. So basically what I lost is the commissions paid to open and close the trade. So $26 loss. And then I've got some SPY, my regular SPY put spreads, and you could see that the July 6th expiration gave me a $288 loss after all the adjustments. Lost $288. And then you could see that the July 8th expiration gave me a $59 loss after all the adjustment. And then you could see that the July 10 expiration gave me a $63 loss after all adjustments. But then I started doing the weekly, so 7 days till expiration and not 30 days. And they've been doing, so the July 13 one you could see is monthly because I opened it June 12 and with the July 13 expiration. So that's a monthly, but ended up being profitable, $62. This one here, June 15 to July 15, is also a monthly, $74 profit. This one here, July 17, it was open July 10, so you could see that it was a 7 days till expiration, and that one was an $84 profit. And then this one here from July 13 to July 20th, so another 7 day, was a $34 profit. And then this one here, the July 22nd expiration, was open July 15, so another 7 days. So the rest are going to be 7 day expirations. So $56 profit for this one. July 24th, $52. So don't have to go through each and every one of them, but you get the idea. There's small profits here and there. So if we just add up the profitable SPY trades, they give me about $542 US. If I just add up the 7 days till expiration SPY trades, it starts at around here, July 17. So it starts on this one here. It gives me a profit of $406. So starting starting July 15 from the SPY put spreads, I made about $400 profit from that. So that's a 2-week period, $400 just from the SPY put spreads. And I know that I've missed some weeks. I know I didn't open on every expiration. So doing better with the 7-day sole expiration versus the 30 days. As you can see, the 30 days has lost me a lot of money. I guess when you've got 30 days, the only conclusion I can make is a lot can happen in 30 days. So it gives time for the trade to mess up. Now, if we look at the commissions, how much I spent on commissions, about $449 in commission. So actually my gross profit is about $1,523, but because of commissions, it ends up being only $1,074. It's still good profit. It's not bad. $1,000 profit US on top of that. So it's a good extra income to pay for bills. Eventually, I would like that number to go up, of course. But so that's what I'm looking for. I'm looking for consistency, being able to make profitable trades on purpose. That's really my goal. So although I've got many trades on, so therefore I end up paying more commissions, but I like spreading out my trades just in case things go wrong. But if I put a lot of capital in one trade and it goes wrong, yes, I saved on commissions, but then I could end up losing a lot. And if we look at how much I would have saved in commissions if I were with interactive brokers, so basically what's costing me a lot with Questrade is that initial $5 fee when you open a trade or close a trade. But the 75 cents per contract isn't a big deal. That's very fair. So basically I want to see how many $5 flat fees did I pay in the month of July. So if I do a quick count, I can see that I've got 56 $5 flat fees. So 56 times 5, that's $280. So if I switched to interactive brokers and I made these trades with interactive brokers, I would have saved at least $300 in commission. But if I switched to interactive brokers and I left my money in my TFSA, then I wouldn't have been able to make these trades because I would have no money in my margin account because my money is in my TFSA. The reason I'm able to make these trades in my margin account with Questrade is because Questrade is able to leverage your TFSA to give you extra buying power in your margin account. So that's something I have to consider. So if I don't care about my TFSA, if I don't want to have a TFSA, I could take the money out from my TFSA and just put it in a margin account with IBKR, and I would save on commissions for sure. So that's definitely something I could consider, but I think I'd rather use my TFSA and at the same time with that capital have some buying power in my margin account to make these trades. So end result isn't so bad. I can't be disappointed. I wish it was higher, of course. Like I said, what I'm looking for is, can I do these trades on purpose every time? Are they consistent? So I'm happy with my SPY put spreads. I'm going to continue with 7-day sole expiration. Something that disappoints me is the fact that the bulk of my profits comes from 2 trades, which is the Netflix earnings trade, where if I can find it here, so $467 comes from just one trade. So I'm not always going to have a Netflix earnings every week. So although I'm happy with the profit, but the fact that it's not it's not a profit that I can make consistently, because I'm not going to always have a Netflix earnings or something similar to it. I need to look for trades that I can place consistently regardless of the week. So that's why I have my SPY put spreads, because this is something I could do every week, every Monday, Wednesday, Friday, regardless what happens to the market. And like I mentioned earlier, since July 15, since I started doing the 7-day sole expiration, since July 10, since I started doing 7-day sole expiration, my SPY put spreads have been profitable. 406. So 406 from the SPY put spreads, 7-day sole expiration, and then I lost money from SPY. Actually, let's look at the 30-day SPY put spreads. They start over here. So the 30-day SPY put spreads, I lost $276. All my Spotify trades, so including earnings Spotify trades, that gave me a profit of $166. So the put spread on Spotify lost me money, but all the naked calls and puts generated a profit, and overall gives me $166 net profit. And then from FedEx here to Apple, this is all earnings trades, and this was $300 profit. So earnings trades is also a bulk of my profit, and there's an element of luck because all these stocks went up after earnings. They could have gone the other way. In fact, I still hold a Google put spread that hasn't gone my way. So who knows if that one's going to be a profit or if it's actually going to be a loss and maybe wipe out a bunch of these profits. Thought it would be interesting to mention that my commissions over my gross profit is about 29%. So pretty high in terms of commissions. But like I mentioned, that's because I place a lot of individual trades just to spread out my trades and make sure that they each have their own chance of winning. Alright, so if you have any questions, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. And if you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.